Business owners, are you taking money out of your business the wrong way? Paying yourself wrong could cost you thousands in taxes or even trigger an IRS red flag. Believe me, there is nothing more burdensome than an IRS tax audit. So today I'm going to show you exactly how to legally pay yourself while avoiding most common tax traps. Hi, if you're new here, I'm Chizova. This is the Wealth Lab. This is where you come for fearless wealth building and practical financial strategies. So, if you're a business owner trying to figure out how you pay yourself the right way, can be confusing, but we're going to lay it out and make it very simple to understand today. Why is it important that you pay yourself? If you choose a wrong method to pay yourself based on the type of business you have, you could face penalties if you're paying yourself wrong. You could mess up your cash flow if you're taking out more than you should. Believe it or not, the IRS does care how you take money out of your business because there are different tax implications depending on the kind of business you have. So you want to make sure you pay attention to that. Just because you own the business doesn't mean you can take money out of the business account willy nilly. You need to pay attention to a lot of things. So let's start with the LLC and the sole proprietorships. If you are a sole proprietor, so you have an EIN, but you haven't officially registered your business as an LLC, or you are an LLC, meaning with these two business types, you are filing Schedule C to report your business numbers on your personal tax return. You want to make sure you take owner's draws from the profits, not from the gross. From the profits, not from the gross. So whatever has come in, take out whatever you've spent. Whatever is left over is what is available for you to take as an owner draw. Keep in mind you cannot expense your owner draws. The money you take out of your business is not an expense. It is not a business expense. Do not expense it. The business, you don't get a W 2 from the business, you're just taking money out of it. However, you want to make sure on those profits that you are paying estimated taxes. If you watch enough of my videos, I preach estimated taxes on just about every video because as an accountant, that is the one area a lot of tax clients I have worked with neglect, and they find themselves with huge tax bills come tax filing season. So make sure you are paying estimated taxes or at least setting money aside so that you can handle that or pay that off when you have prepared and filed your taxes. So that is the LLC or sole proprietorships. Well, how about an S-corp? So more or less an S-corp is an LLC that is being taxed as a C corporation or as a corporation. If you're an S-corp, you have to pay yourself a reasonable wage. The business has to have a W-2 on file for you. There has to be official payments from the business. You think of the business as a completely different entity. You cannot only withdraw money out of an S corp. Legally, tax wise, you have to pay yourself a reasonable wage. You can't just, if let's say you are a restaurant owner, your restaurant is registered as an S corp. What you cannot afford to do is to decide, well, I'm running the business, I am paying myself $5 an hour, while the minimum wage in your state is, say, $25 an hour. Yeah, the IRS will take a look at things and say, the money the business is officially paying you, is it reasonable? You have to pay yourself a reasonable wage. Remember that. Put yourself on W-2 payment. I have seen um, businesses, S corps, where the owners are paid on a 1099. Either way, there has to be a legal payment from the business to you as the owner. Now, the amount you pay yourself, or rather the amounts the business pays you, can be expensed. It counts as a business expense. You can file it as an expense. And then whatever is left after you've paid your salary, the business has paid you the salary. If there are any profits left, you can withdraw that as a distribution. And it has to be clearly marked on your financials that you took out distributions. And again, pay estimated taxes. Pay estimated taxes. You want to pay estimated taxes, especially big or the profits. I say that because The S-corp flows to your personal tax return. If there is a profit in the business, you are going to pay taxes on your personal return from the S-corp. So on the profits that are left, you can withdraw money as a distribution after you've paid yourself to handle estimated tax payments for the profits. But keep in mind, pay estimated taxes, or set the money aside for when you file your return. Now, moving on to partnerships. If you have a partnership, all partners have to be paid one of two ways, either as a guaranteed payment or as a distribution. All partners have to be paid. The guaranteed payments, think of it as salary to the partners. You can take it out as W-2 or 1099, but the partners have to be officially paid. Or it can be distribution. You can say, well, we'll file our articles of partnership, or come up with a partnership agreement. We're going to share the profits and the losses equally, 50%, whatever that looks like. And whatever cadence you've agreed to, whether it's monthly or quarterly, you can share the distributions. Again, same thing. Because it flows to your personal taxes, the partnership will issue you a Schedule K1 that shows the distributions and all of that. It's going to flow to your personal tax return. You want to make provisions for estimated taxes. What most partnerships do is they take distributions out of the partnerships to pay estimated taxes. However, if the partners are being paid as guaranteed payments, the salary to those partners is already taxed and so on, and so you're getting a W-2 from the partnership, and the taxes are handled in that way. I am going to put up another video that dives a little bit more into the differences between guaranteed payments or distributions. Or I'll put it up as a short, but there's going to be more information out there, and I'll put the link in the description. And so now we've gone through the most common business types and how you can pay yourself. As we round up, you want to keep a few things in mind. Make sure you're avoiding these mistakes. Avoid taking cash out without tracking it. You have to track cash. I mentioned it on the S Corp when I was talking about distributions. When you take money out of the business, whether it's a distribution or salary or whatever it is, or you spent use the business credit card for personal expenses, track it. You have to track everything, and then just make sure you've properly booked them. You're not claiming expenses that shouldn't be expenses. You're not listing distributions as expenses. Take cash out, track it, and if you don't know what to do, hire a professional, consult with one, or hire one, even if it's on a part-time basis, to make sure that every cash movement in and out of your business account is being properly tracked. If you're an S Corp, taking only distributions is an audit risk. I cannot stress that enough. Avoid that mistake. You have to pay yourself a reasonable wage. There are W-2 or payroll providers out there that offer low cost packages if you're only paying yourself, or handle it manually. You sign up for an EFTPS account, pay yourself, calculate the taxes, make sure you're remitting payments to the IRS and to the state. Do not take only a distribution. That is the fastest way to trigger an IRS audit if you're an S corp. Avoid not setting aside money for taxes. Estimated taxes, you have to. Very, very important, especially if you're an LLC or a sole proprietorship. Very, very important for all business types. And do not mix personal and business funds. Do not mix personal and business funds. One more time, do not mix personal and business funds. In the event of an audit, it is going to be so much easier to be able to meet the audit requirements if your personal and business funds are segregated. Make sure you keep that in mind. Go forth, create wealth fearlessly, be great at what you do, and I wish you the very best. Catch you in the next video.